Huge bounce in precious metals, gold up $300, silver up $10, oil pulled back right to a key buy zone. Is this the big opportunity? Let's dive in and take a look at everything. I'm Patrick Ceresna, and we every morning here, Monday through Thursday at 9:30 a.m. Do a quick market review. If you're loving this, join us and put us into your morning routine. Let's dive into the charts and take a look at what's going on here. So I starting off here with gold, and you can see this big green candle reversing. We hit yesterday an intraday low under $4,500 on gold. I'm going to break this to a 4-hour chart and actually just take a look. That drop in gold from its peak to its trough was a 21%, almost $1,200 drop, and now we're getting the retracement. So what is this just going to be, like a dead cat bounce, or is this going to be the resumption of the gold trade? While the probability of a rally to once again back to its major highs isn't zero, it is not the likely outcome. This bounce is likely to be faded, and we're probably going to spend another month or more of gold going into consolidation. But with the magnitude of this drop on gold, the odds are very good that, or at least quite reasonable, that we're not going to lower lows. So what I would envision here, if I can just draw you on, is that we maybe temporarily trade above 5,000. We end up spending a couple of weeks just consolidating back to the lows. There's even a chance it makes lower lows, but I wouldn't be banking on that. And after an extended consolidation is when gold would have another opportunity to take stabs at the highs again, probably deeper into the second quarter. And so really what it is that you can stay bullish gold in the much bigger picture. The damage really has already been done. But you have to just curb your enthusiasm that this is all going to happen now, and like somehow here in February we're going to be pressing new highs again. Odds are that's going to be a second quarter story. Month of February is going to be gold and silver consolidating. So here, when I look at silver up to $10, and while $10 is a big deal, you can see that we're nowhere near the 50% retracement of this decline. And the point here is that this is just a bounce from an incredibly oversold condition, and we could easily be making it up to even $95 on the upside on reaction. But the story is literally the same as when I was talking about here on gold, which is this bounce is going to likely go a little bit higher, and then we're going to spend a period of consolidation that is going to probably retest those lows in the weeks to come in there. And I like to think of it like an analogy of like lungs breathing in and out. The markets had a huge inhale on the upside when that move happened, and now the markets are exhaling and consolidating. So just, again, curb your enthusiasm about there being a huge bull run here in February. Odds are it's a second quarter story if there's going to be another bull run. But what I wanted to really highlight this morning is what's going on in crude oil. Now, all year we've been calling the same pattern over and over again, which is every time some sort of negative news comes in and oil sells, the buy on dip traders come in and buy the dip. And since it's been working all year, what we're trying to stress test here is that pattern going to persist. Obviously, there was a big risk premium being put into crude oil on the chance that there was going to be a strike in Iran over the weekend. The moment it was clear that that wasn't happening, the market pulled some of that risk premium out of oil, causing this pullback. But we pull back toward that 50-day moving average. Some short-term Fibonacci zones are being directly tested in this area. Will we see that this is bought on dip? I think there's huge asymmetry on that in testing out that thesis. It's not only been working all year, but we're at a moment where you can take a very small risk to find out whether or not the bull continuation pattern happens here on crude oil. So this is 100% something to keep a very close eye on. The next thing I want to touch on is a dollar. And so the dollar index was incredibly oversold on the short term. And we're also getting that fib retracement. So we're now approaching the moving averages and the Fibonacci retracement. So in this 97.50 is a 50% retracement of that decline. And so this is actually the make it or break it moment for the dollar. We obviously are always going to see reactionary bounces, no different than we're getting in gold and silver. But if this is the failure point, this 97.5, 98 level is where the ceiling now becomes for the dollar advance. If it rolls over here, then it's going to confirm a US dollar bear continuation pattern that would mean that the primary trend of the dollar is down and likely to continue lower. And so this is a very important inflection point on that. Just one quick update on the S&P. Dips are starting to get bought. The big turn point yesterday was the huge breakout in Apple. One of the things that I continue to think is the core thesis of whether or not the market has the gas in the tank to punch 7,400 on the upside. 7,500 would be if the Mag 7s are participating. Last week, there was a lot of disappointment in those earnings, but we're seeing some of the stocks like Apple bouncing back quite a bit. Obviously, we have Google and Amazon coming up this week. Will the Mag 7s be able to join the bull party? That's what's needed in order for the S&P to take the next level higher. And so right now we're trading along 52-week highs, and we're going to find out this week whether or not that Mag 7 participation is going to play out. The big laggard and the big story to watch, in my opinion, remains to be whether or not Nvidia also joins the party. This is the SMH, which is the semiconductor ETF. And what we had was a beautiful bull continuation pattern on the upside. And the crazy part about the last 2 months of advance on this was that with 20% of its weighting in Nvidia, Nvidia never even upticked during this advance of the semiconductor index. And really, this asks the question is Nvidia in the process of putting in a topping formation? Many technicians will just try to cookie cutter head and shoulders kind of topping formation on Nvidia. And this is going to be a huge factor. It's one of the largest components of the Mag 7s. And will this be able to stay above its 50-day moving average, break all these right shoulders and make a punch to 200? It's going to be really important. If we see any sustained breakdown here in Nvidia, it could be the party ruiner that could trigger the S&P 500 sell cycle. Right now, the bulls have a pretty good cushion. We're sitting exactly at 7,000 on the upside. A lot of those triggers from the CTAs and other systematic strategies lie below 6,800. Volatility remains low, including realized volatility, which is important. Vol targeting funds are going to start degrossing if we realize volatility increases, and that's just not really developing just yet. And so the bulls right now are still in the driver's seat and still driving this, but the kind of trigger point for systematic trading is creeping up behind the market. And so the bulls really do need to punch 52-week highs to keep the party going. And so that's the update I wanted to leave all of you. I'm live here in Mexico City. I'm trading live here all week long with my inner circle. We're having a great time. So I'm going to get to the members over here, but we're going to be continuing this conversation on where's the trade with our members of Big Picture Trading, where we're going to be putting all of these ideas into trades. And so if any of you want to try a free trial to Big Picture Trading and see what we do over there, feel free to click on the link in the chat below, or just visit bigpicturetrading.com and try it out there. You'll see when you come into the membership with a free trial, there's a big orange join now button for the where's to trade, and you can join live, where we're going to be talking about all sorts of trade ideas and all sorts of ways to monetize what's going on here in these markets. So we'll see you all on that there that are trying out the free trial. Otherwise, the rest of you, I'll see you in the morning, where we'll give you all an update. Thanks, everyone.